Steve Wesley joins us, former board member at Tesla, on what has been an insane run for the stock. Steve, welcome back. Good to see you.
Good to see you.
Cramer this morning pointed out company could basically print whatever they want on Wednesday. It's unlikely to dampen that much enthusiasm. Would you go that far?
Well, look, at 1,500, Tesla shares are pretty nosebleedy. But if you step back a little bit, there are two stories here that I think are interesting. There's first is the part that everybody knows, and that is Tesla is beating analyst expectations. Just a month ago, analysts were predicting 75,000 cars. They delivered 90,000. Tesla's beating the recession. Global auto industry down 30%, Tesla only down 5%. And third, they're just plain moving faster than all of the others, expanding new car plants into China, Germany, now Austin, Texas, a second one on the boards in China. That's all impressive. And I think that's driving a lot of this. But the part that people are just starting to get their arms around is probably more important. And that is Tesla was the first auto company to connect every vehicle. This enabled Tesla to track their cars, to do online maintenance, if you will, to help develop the first self-healing car. They were the first to provide what's called over-the-air OTA changes so Tesla can begin to charge recurring revenue models for things like autonomous driving. All of these new options drop 99% margins to the bottom line. This is what is making Tesla in the minds of many investors a good long-term buy. They're figuring out how to make a profitable car company in the future. You know, well, most auto manufacturers are making boxes on wheels. One could say Tesla is making the first perpetually upgradable machine. Many people think it's exciting. We'll see if it can maintain that share price.
Yeah. It sounds, though, like you give them more credit for supply than maybe the ongoing consumer demand or interest, right? They've been able to deliver on capacity.
Well, they're not only delivering on capacity, but they're the clear innovation leaders. They're the brand everybody wants to have, even in places like China, where there's a lot of commoditization. They have built the brand people want to have. They are the clear innovators. Everybody knows now the world's going electric. There will be a lot of competition, but right now they're in the driver's seat. And the interesting news is because there's so much demand for the vehicles and the shares, that gives them the ability to raise more capital at precisely the time other auto companies are stuck in the middle of recession, declining revenues, and they have to spend a lot of money to retool their plants to make the electric vehicles millennial buyers want. Old guys are stretched. Tesla is sitting on dough. It's not a bad place to be.
Point you mentioned the potential of raising capital, all the big picture opportunities that you cite there, they were there a month ago when the stock was $500 a share lower. So obviously the market has sort of rushed to this position of giving the company a lot of credit for what it might do down the road. Would you be advocating, if you were on the board, that they do raise some equity here, perhaps in conjunction if they go into the S&P 500 as a very big new component down the road?
Look. Tesla's got a lot of things right, but I don't know if I could defend a $1,500 share price. So if I were on the board today, I think I would be thinking about that secondary, raising a little more capital while the going's good. And you know, the markets may be in nosebleedy territory already. So this is probably a pretty good time to stash some extra cash away.
Philibert calls it kind of the Tesla effect with what we've seen with other EV companies in light of Tesla's recent move. How would you assess Tesla's moat amid, some of these more startup EV companies?
Say that again, please.
How would you assess Tesla's competitive moat amid, I
think Tesla's competitive moat is threefold. First, they've built plants all over the world, so they have a cost advantage, especially in China. They don't have to pay tariffs while others do. Second, they've got an IP moat. They have technology that others just haven't figured out yet. The third part of the moat is they have taken the cost of batteries down further than anybody else. They're one of the first to bring batteries in-house for production. Second, they're playing one battery provider off against another. They have battery partnerships with Panasonic in the US, CATL in China. The key to electric vehicles, about a third of the cost of the entire vehicle are the batteries, not the engine, the batteries. Tesla's been the leader in taking those costs down.
And Steve, Mike alluded to this just a little while ago, but if Tesla reports a profitable quarter on Wednesday, it will have checked all the boxes for entrance into the S&P 500. How much of the recent run-up in the stock price do you think is in anticipation of being included in the index versus some of the fundamentals that you were mentioning earlier?
Well, it certainly doesn't seem to be tied to the fundamentals, but I think a lot of it is tied to the potential of going on to the New York Stock Exchange, and some of it's just the frothiness of the market in general. As you know, there are these 7 or 8 story stocks like Amazon and Microsoft and Facebook. Tesla's clear at Shopify. Tesla's clearly in that spot now. People love to follow them. You may love Elon, you may hate him. By God, it's an exciting story. So it's certainly not based on the fundamentals, but you got to hand it to them for doing a lot right. Now would be the time to raise capital.
Finally, Steve, I wonder if you had to pick a bigger competitive threat to Tesla these days, would it be something like a Nikola, or more anecdotally say this new partnership between Intel and Ford on next-gen driving?
It would be the latter. Look, Nikola's an exciting story. I hope they do well. They're not even putting cars on the road for the next 2 years and quite possibly 3 years. So I don't think that people at Tesla are losing too much sleep on that one. What you got to be thinking about are Volkswagen, because they're international brand with low-cost manufacturing. They're introducing just today their ID.3, which is a lower-cost car, which is a much broader, wider audience. And then you also need to worry a bit about the Chinese, because they're commoditizing Teslas. Firms like XPeng in China are already producing low-cost Tesla knockoffs in China. And to quote Ghostbusters, if you see someone copying your car in China and selling at half the price, who are you going to call? The Chinese government? I don't think so.
We definitely can't wait for Wednesday night, Steve. Thanks for that. It's going to be an interesting setup. We'll talk to you later. Steve Wesley.
All right. Thank you so much.